They created a monster, and yes, that's the whole problem. They created a monster. If they really wanted to deflate the system, everything would collapse like a house of cards, and they can't do that. Friday, November 11th, 2022, Maneco 64, home of alternative economics and contrarian views. Very interesting day yesterday in terms of economic data from the US and the market and currency reactions that we saw yesterday. I'm more convinced than ever that hyperinflation has been baked in the cake for many years, and I've talked about this for the last few years. I've got tons of videos about hyperinflation, and of course it's becoming more and more mainstream to talk about hyperinflation. So we're going to look at that today. So yeah, today is the 11th day of the 11th month and the 11th hour. Some of you have watched the new movie on Netflix, All Quiet on the Western Front. I think that's an interesting movie to watch, or film to watch. And why am I talking about this? Well, because World War I think, put us on the path to where we're now. Up until 1914, money was sound, and things were going on pretty nicely. And it just shattered everything, World War I. And you can go back to that period also to see that you got hyperinflation as a result. In 1923 in Germany, you got the Russian Revolution, the whole political, social, how can I say, fabric of the Western world was shattered, and it's been, we're living with the consequence of that war. So I think it's interesting to just note that today was the day that World War I ended, but it doesn't mean that all the problems ended, and we're still here paying for it, I would say. So now to the hyperinflation, why I think there's no way out, and especially with the reaction of the markets yesterday to that little drop in the CPI, slightly better than expected on the downside, of course. And I just wanted to talk about this quote. In this quote, people say that Lenin didn't say it. Lord Keynes attributes it to Lenin. But anyway, whoever said that, this quote, I think is very, very relevant today. So here's the quote. There's no subtler, no surer means of overturning the existing basis of society than to debauch the currency. The process engages all the hidden forces of economic law on the side of destruction, and does it in a manner which not 1 in a million is able to diagnose. And I think that's where we're now. And that's why I always go on about the definition of inflation that only government and the central bank can create it. Yesterday, I think the economic advisor for the White House said that selling the oil reserves helped bring down inflation. Well, you shouldn't listen to that guy. He's trying to keep you, or maybe he's ignorant of what real inflation is. As I've said, it's government and the central bank that created. It's basically creating money out of thin air, and that's how you destroy the basis of society, because you're able to steal from real producers. And yes, and it's not me saying this. Look at Felix Sommeré. He warned us back in the early 1900s about inflation. And even the Webster dictionary back in the 70s, they knew what the definition of inflation really was, as you can see here. And I've had comments from many people, well, that's an old dictionary, you know, what are you talking about? But now back to what happened yesterday. Enough of history. And then I will reference a book and go back to history. But yes, I said yesterday in my video that if CPI came lower than expected, I expected a big gain in the stock and the bond market, and also precious metals. I said they would do well. And I wasn't really surprised about the massive moves that we saw. And the Dow was up over 1,000 points. The bond, the Treasury curve dropped like a lot in terms of yields, as you can see here. The 10-year dropped 33 basis points. The 2-year dropped 30. So how can a slight improvement from the expectation? I think the expectations range from 7.9 to 8% CPI. And of course, we all know that the CPI is fabrication. It's a lot higher than it is. But it's all to do with the Lenin quote, because they try to keep you blind to the fact that CPI is the consequence of inflation. And if you really want to see what inflation is, you need to look at these two charts here. So you've got the Fed's balance sheet, which they've inflated massively, and they can't really deflate it back to the levels of pre-2008. And then you have the M2 money supply. They can't deflate that back anytime soon. So that's why we're going to continue to see inflation. And as you can see by the chart of the NASDAQ long-term chart as well, this correction, I think, might look just like a blip if we get this crack-up boom. And what is the crack-up boom or hyperinflation? Well, we're going to reference human action, which is like the Bible, I would say, for the Austrian School of Economics by Ludwig von Mises. Ought to be on the bookshelf of every thinking man. Wall Street Journal said that. I don't think they'd say that today, but I'm going to reference a passage that I've referenced many times. And it's about inflation and then the eventual collapse of the currency, which is the hyperinflation. Is it a bad thing? Well, it is a bad thing, unfortunately, if you're on fixed income, if you work for the government, and if you have a lot of fiat currency savings. That's what I would say would be a bad thing. And before I go onto this passage, I like to thank my sponsors, and my sponsors in North America and in the UK. In North America, they're ITM Trading and Miles Franklin. They can help you with purchases of precious metals. The details are below in the description. In the UK, of course, is Gold Investments. Details as well are in the description below. So, page 427. I think you can find this a free PDF online, or you could buy the book on the Mises.org website. Shout out to the Mises Institute. They're the premier institute or educational institution for the Austrian School of Economics in the US. I was there in 2002 for their 20th anniversary in Auburn, Alabama. But anyway, let's get on with von Mises, what he says about the inflation and the eventual collapse. The course of a progressing inflation is this. At the beginning, the inflow of additional money makes the prices of some commodities and services rise. Other prices rise later. The price rises affects various commodities and services and has been shown at different dates and to a different extent. The first stage of the inflationary process may last for many years, While it lasts, the prices of many goods and services are not yet adjusted to the altered money relation. Money relation is all to do with the Fed's balance sheet and that M2. And if they can't bring that down, and we can see that they can't bring that down significantly because markets have been in a panic the whole year, and the economy is going to start to melt down. So it continues. There are still people in the country who have not yet become aware. There you go. I would say these people are more like the Wall Street gang and the top 10% that are going to do well because they're going to get, their assets are going to go up, but they're not going to realize they're actually in a crack up boom. Have not become aware of the fact that they are confronted with a price revolution, which will finally result in a considerable rise of all prices, although the extent of the rise will not be the same in the various commodities and services. These people still believe that prices one day will drop. Waiting for this day, they restrict their purchases and concomitantly increase their cash holdings. As long as such ideas are still held by public opinion, it is not yet too late for the government to abandon its inflationary policy. And believe me, they're not abandoning it because they can't, because in a fiat currency system, it's inflate or die, and politicians don't like their gravy train to be stopped, or they don't like to die. But then finally the masses wake up. They become suddenly aware of the fact that inflation is a deliberate policy and will go on endlessly. A breakdown occurs. Well, are we in the breakdown? I actually think we are, and maybe yesterday was what sparked the breakdown. We'll have to see. No one knows the future. No, it's really hard to tell. But if ever there was a breakdown, I think it could be that spark of that lower than expected CPI yesterday. But anyway, let's continue. The crack up boom appears. Everybody's anxious to swap his money against real goods, no matter whether he needs them or not, no matter how much money he has to pay for them. Within a very short time, within a few weeks or even days, the things which were used as money are no longer used as media of exchange. They become scrap paper. Nobody wants to give away anything against them. It was this that happened with the continental currency in America in 1781, with the French mandat territoriaux in 1796, and with the German mark in 1923. It will happen again whenever the same conditions appear. If a thing has to be used as a medium of exchange, public opinion must not believe that the quantity of this thing will increase beyond all bounds. Inflation is a policy that cannot last. So actually, a hyperinflation would be the best thing to end the inflationary policy that we're under. And many people don't believe we're in an inflationary policy. But if you followed me since late 2015, I've always told you that we had inflation and that they were subverting the real definition and using the CPI to keep people asleep. And it's not only in the last 2 years that we've had like price rises. We've had it since 2008, even in the supposedly low inflation environment. We've had a lot of shrinkflation. Wages haven't kept up. Yes, the stock market and real estate have gone up, but yes, so I think yesterday was a very significant day. I could be wrong, but you got to take a view. And this is not financial advice, of course. This is just my opinion. So with that, let's quickly look at the markets this morning. It's 8:30 a.m. London time. So we've got spot gold at 1758.80. It's up about $3. High's been 1764. The low has been 1747. Silver is up 13 cents at 21.80. It has been above 22 actually. 22.07 is the high, 21.48 the low. So the Dow futures up another 238 points. What's 238 points amongst friends, right? If we went up over 1,000 yesterday. The NASDAQ futures up 1%. The S&P 500 is up 0.75%. So it's not just what's his name, Jay Powell. You have to go back to Greenspan, Bernanke, Yellen. These people, they planted all the seeds for this, and they made, they created a monster, and yes, that's the whole problem. They created a monster. If they really wanted to deflate the system, everything would collapse like a house of cards, and they can't do that. There's many people who still believe that Jay Powell is going to be able to engineer soft landing. No, he's engineering the biggest crack-up boom in the history of mankind, recorded history, I would say. So let's continue to the currencies. Yes, the dollar lost a lot of ground. I mean, it lost over 3% against sterling. Of course, sterling has been dropping a lot in the last year or so. Does that mean that we should jump to the other currencies that are not dollars? No, because as you can see by this chart here, the dollar index is over the last 40 years since it's existed. It's really going nowhere. It's a distraction. The place to be, in my opinion, is still precious metals, gold and silver, and hard assets. In that order, really. Hard assets, I mean commodities. So sterling is up slightly this morning, up a tenth at 117.26. The euro is comfortably above par now. It's at 102.50. It's up 1/3%. Yeah, the dollar dropped a lot versus the yen. Again, it gave a bit of breathing space to crappy currencies like sterling and the yen. Well, they're all crappy anyways. But the dollar is at 141.21. It's up slightly this morning versus the yen, but we went up to almost 150 recently. So the dollar has dropped a lot there. Dollars dropped a lot as well versus the Swiss franc. This morning it's unchanged at 96.32, but if you remember well, we've been back above 100 recently. And the dollar yuan is almost all the way back down to 7. It's at 7.10. Yes, we were above 7.30 recently. It's down 0.2% this morning. And the dollar is pretty steady against the ruble because the ruble has been pretty steady against the dollar anyway for the last few months. It's trading just above 60. To the other currencies, we've got the Aussie dollar up 0.5%. 66.45. The dollar is down a tenth at 133.08 versus the Canadian, and the Kiwi dollar is above 60. It's up slightly, but I think yesterday we had a 58 handle. And to the people not in the US, my viewers in other countries who are into gold and silver, you will have noticed yesterday that your currencies went up very sharply versus the dollar. And even though gold went up as well in dollar terms, it didn't really go up too much in your local currency, just like me in sterling. Is that a bad thing? No, because I think eventually, as I've said before, all fiat currencies are sinking, and I've always said that they take turns to sink. Right now is the turn for the dollar to sink, but ultimately the only currencies that will float and not sink are gold and silver. They're gonna save you, in my opinion. And yes, that's why I keep stacking and I try to hold on to them as much as possible. Where's the end game? When do I get rid of these currencies? Well, when you think they're good enough or they're valued fairly enough to buy very cheap assets, I would say. Hopefully you won't have any emergencies in the meantime, but I think there's still a long way to go, and I try to hold them to them for dear life, I would say. So let's look at the general commodities. WTI crude is up 2.75%, 88.14. Brent is up 2.5%, 95.39. High grade copper is up 2.6%, 385 almost. US nat gas is up 0.5% at 644. Let's check the European natural gas futures. Well, that's down 8.3% at 104. I have to say the weather is quite mild for this time of the year. Maybe that's why natural gas prices are dropping a little bit. And to the bond market, I told you earlier that treasuries rallied massively yesterday with that slightly better than expected CPI. Right now, the 10-year yield is down almost 2 basis points at 381. And the same thing happened with the UK gilt market yesterday. Yields dropped because treasury yields dropped. But this morning, we're back up a little bit. The 30-year is up actually 10 basis points at 350. And the 10-year is up 7 at 336. And I think we had some not so good economic data from the UK. GDP for the last month dropped by 0.6. Is expected to drop by 0.4. For the third quarter, it dropped by 0.2. So our economy is not in good shape. And I saw that German CPI came out at 10.4 as expected. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great day and a great weekend. Take care. Bye.